If you are a freelancer, there is a type of insurance that is arguably more important than health insurance, and almost nobody in the freelance community talks about it. It is disability insurance. Today, I am going to explain exactly what it is, what it costs, and why ignoring it is one of the biggest financial risks you are taking as a self-employed person. Here is the core problem. When you work a traditional job and you get injured or seriously ill, your employer typically provides short-term and long-term disability coverage. You keep getting a paycheck, maybe 60 to 70% of your salary while you recover. As a freelancer, if you cannot work, your income drops to zero immediately. There is no safety net, no employer picking up the slack. Your clients move on to someone else, and your bills keep coming. According to Social Security Administration data, roughly 1 in 4 workers will experience a disability lasting 90 days or more before they reach retirement age. That is not a rare edge case. That is a 25% chance. Let me explain what disability insurance actually does. You pay a monthly premium. If you become unable to work due to illness or injury, the policy pays you a monthly benefit, typically 60 to 70% of your pre-disability income, after a waiting period called the elimination period. You keep receiving that benefit until you recover, until the benefit period ends, or in many cases until you reach age 65. Now there are 2 major types you need to understand: short-term and long-term disability insurance. Short-term policies kick in quickly, sometimes after just a week or 2, and cover you for 3 to 6 months. Long-term policies have a longer waiting period, usually 60 to 90 days or more, but they cover you for years or even decades. For freelancers, I strongly recommend prioritizing long-term disability insurance. A short-term disability is something you can potentially survive with an emergency fund. A long-term disability without insurance is a financial catastrophe. The most important distinction in any disability policy is own occupation versus any occupation coverage. This matters enormously. An own occupation policy pays benefits if you cannot perform the specific work you were doing before the disability. If you are a freelance graphic designer and you lose fine motor control in your hands, an own occupation policy pays out even if you could technically answer phones or do some other job. And any occupation policy only pays if you cannot perform any job for which you are reasonably qualified by education, training, or experience. There's a much higher bar to clear, and claims get denied far more often. For freelancers, own occupation coverage is worth the higher premium. Your specific skills are your entire business. Let me talk about how much coverage you need and what it actually costs. The general rule is you want to replace 60 to 70% of your gross income. Insurance companies will not let you insure 100% because they want you to have a financial incentive to return to work. If you earn $50,000 a year freelancing, you would want a policy paying roughly $2,500 to roughly $2,900 per month. For a healthy 35-year-old, a long-term own occupation policy with a 90-day elimination period would cost approximately $75 to $125 per month, depending on your specific occupation, health, and the insurance carrier. At $75,000 in annual income, you would want $3,750 to roughly $4,300 per month in benefits. Expect premiums of around $110 to $180 monthly. At $100,000 in annual income, you would want $5,000 to roughly $5,800 per month in benefits. Premiums would run approximately $150 to $240 monthly. Those numbers vary significantly based on your age, health, occupation class, and the specific policy features. But that gives you a realistic range. Now let me address the tax treatment, because this is actually good news for freelancers. When you pay your disability insurance premiums with after-tax dollars, which is what you do as a sole proprietor since these premiums are not deductible as a business expense, the benefits you receive if you ever file a claim are completely tax-free. This is a significant advantage. If your policy pays $5,000 per month and you paid the premiums yourself with after-tax money, you receive $5,000 per month with no federal or state income tax owed on it. This means you actually need less coverage than you might think, because the benefit amount is not reduced by taxes. The elimination period is something freelancers need to think about carefully. This is the waiting period between when you become disabled and when benefits start. Common options are 30, 60, 90, and 180 days. A longer elimination period means a lower monthly premium. A 90-day elimination period is the most common choice and often represents the best value. But here is what matters for freelancers specifically. You need to have enough cash reserves to cover that elimination period. If you choose a 90-day elimination period, you need at least 3 months of living expenses in an accessible emergency fund. This is another reason your emergency fund is so critical as a freelancer. It bridges the gap between when you stop working and when disability benefits begin. Where do you actually buy this? You have a few options. For individual policies, major carriers include Guardian, MassMutual, Northwestern Mutual, and Principal. Working with an independent insurance broker who can shop multiple carriers is usually better than going directly to one company. They can compare quotes and policy features across carriers. Some professional associations and freelance unions also offer group disability rates, which can be cheaper than individual policies, though often with less favorable terms. Check if any professional organizations in your field offer this. Let me also mention what disability insurance does not replace. It does not replace your retirement contributions. If you are maxing out a solo 401k at up to $70,000 per year or claiming the 20% QBI deduction on your qualified business income, a disability disrupts all of that. You will not be contributing to retirement while disabled, and your QBI deduction disappears because you have no qualified business income. Disability insurance replaces living expenses, not wealth building. This is another reason to get it early and build other financial buffers alongside it. Here is my concrete recommendation. If you are a freelancer earning over $40,000 a year and you do not have disability insurance, this should be the next financial product you purchase, ahead of increasing retirement contributions, ahead of a new computer, ahead of almost everything except health insurance and a basic emergency fund. Get a long-term own occupation policy with a 90-day elimination period, covering 60 to 70% of your income. Contact an independent insurance broker, get quotes from at least 3 carriers, and do it this month, not next quarter. Your ability to earn income is your single most valuable asset as a freelancer. Protecting it is not optional. If you found this valuable, subscribe to the channel. I cover one specific freelance money topic every week, and most of them are things nobody else is telling you about.